Grace, I'm not sure if you heard me there, but let me repeat that, 6.8% PPI. What do you think?
Yeah, it's high, but it's not exactly surprising, given that we do, as you mentioned, have very high commodity prices on the global front so far. I think what is important going forward is that if you look at the broader inflation picture, you basically have two trends, right? CPI and PPI. And we do have actually CPI in line and even slightly below expectation, whereas PPI continues to move up. So I think going forward, the important thing is how does PPI feed through to CPI? Our baseline is that there will be moderate impact on CPI, but overall, for the full year, CPI should be pretty well behaved. And we do have a full year CPI expectation at about 1.4%. So what that means is that PPI is probably going to put some stress and pressure on certain corporate sector, especially those on the downstream sector, because of the lack of end consumer pricing power. But overall CPI should still be quite stable, and therefore the pressure on monetary policy, for instance, from the CPI front should still be quite manageable.
And when do you think PPI, let's start with that, when do you think PPI peaks?
We do think on the base effect front, it will quite likely stabilize going forward in the next, say, 2 to 3 months, and then gradually trend down into second half of the year. But overall number, yeah, you will still be pretty much on the high side, say 5-6%, or even somewhat slightly higher, potentially slightly higher than 7% for 1 or 2 months.
And on consumer prices, so your full year forecast, if I heard you correctly, is 1.4%. How much of that is actually genuine demand-driven price pressures?
Yeah, that's a very interesting question. So for the CPI side, we actually did have a couple of months of CPI deflation, if we remember, late last year and early this year. And if you look at the CPI broader trend, there are a couple of factors affecting that. I think the most volatile one is food prices, particularly pork prices. And on pork prices, we have already seen the peak of pork prices, which have been gradually on the downward trend. So that should be a important factor that will be dragging down CPI. And then on the other hand, is the fundamental consumer demand, which is mostly reflected in the core CPI front. And core CPI has been generally weak in recent months, and that was only gradually trending up in the latest 1 to 2 months. On that regard, we are looking for consumer demand to gradually recover going ahead. So that would suggest your core CPI would gradually trend up, but in a very managed way.
That's the title, in fact, of your report, which is dated Friday, May 7. Consumption recovery in China may be late, but it's coming. What's delaying this? And what gives you certainty or close to certainty that it is, in fact, coming?
Yeah, it's a very interesting topic. So if you look at China's recovery last year, right, we do know that the recovery, post-pandemic recovery, was led by the policy-related sectors, infrastructure investment, housing market, as well as the export sector. Consumption and services have generally been lagging, partly because of the very nature of policy support from China, which mostly focus on infrastructure side and on with impact on the credit-intensive sectors. So in that sense, consumption and services have been lagging the overall economic recovery. It is lagging, but it is coming. Earlier this year, consumption and services was somewhat disrupted because of the short-term cross-regional travel restrictions. But then by March and going into April, we have seen signs of very decent recovery on those areas, especially with the May 1st labor holiday period, suggesting booming domestic tourism activity. So going forward with improving labor market conditions, growing household income growth, and with the buildup of excess household savings briefings that we saw through later part of last year, we do think that the groundwork has been laid for further recovery in consumption spending and services sector.
And I'm sure the question you get, Grace, with that improvement, do you think monetary policy and fiscal policy adapts with that? In other words, do you think things tighten towards year end?
Our broad picture for this year is one of normalization of macro policy. So that means consolidation of fiscal policy and gradual slowing in credit growth, along with selective industry policy like some further tightening on housing market policy. So with that whole backdrop, that would mean that in your growth picture, you would have some of those sectors which have been more dependent on the policy side last year, like housing sector and to some extent infrastructure investment. That part would likely consolidate and slow somewhat going ahead. And at the same time, those areas that we mentioned, housing, consumption spending, service sector demand, which are less sensitive to policy stance, would continue to grow along with the broader economic recovery. So in that sense, on the macro policy side, what we are expecting is basically a gradual trend of normalization, coming partial reversal of last year's easing, and one of basically bringing the economy back to its potential trend growth.
Grace, final question. In about 20 minutes, the 7th census report is coming out. Not that it's going to be new news. We knew and we know anyway that the demographic profile of China has been slowly deteriorating since the 90s. As an economist, what is your research telling you about this? What's the key takeaway?
Yeah, to us, for this year, the growth picture should not really be a problem. The government is looking for 6% growth. We are actually looking for 9.3% growth. So the near-term growth is a very stable and steady recovery one. We are actually quite concerned about the medium-term perspective, particularly from the population demographic perspective, in the sense that the decline in the birth rate and the aging population would exert pressure in terms of the economy's potential growth, as in your labor input would turn from a positive factor for growth into a drag. And at the same time, as the government has committed to double the size of GDP by 2035, that would actually mean that your other parts of the economy will have to grow faster. And that probably would mean fixed investment. And so that will, again, mean that your economic rebalancing process into consumption and services may be slower than otherwise. So in that regard, yes, demographics is a very important medium-term issue. And we do think the government should take efforts to help to raise the childbirth rate, as well as potentially to raise the age of retirement and push ahead with urbanization, so that you have more migrant workers staying in the urban area. They can work for longer years, and also they can boost domestic demand in the medium term.